You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again, kicking off our broadcast week here on the Options Insider Radio Network. My name is Mark Longo from the aforementioned network, of course, as well as from the ever compelling OptionsInsider.com. Check it out there, of course, during the show, after the show, whenever floats your boat on the weekends. A lot of great stuff there going up throughout the week. Most actives multiple times a day. And a lot of you guys love that. Of course, all that earnings data we're always talking about may have some new stuff hot off the presses from our friends at Orats as we speak. Hitting the show right now, of course, hitting the website today as well. So all of that updated earnings, moves, season results, and the trades. If you haven't checked out the trades report, it's pretty cool. Get you thinking a little bit. You're like, interesting. A calendar in this one, maybe a straddle in this one. It gets the wheels turning, which is always good at this time of year. And of course, however you enjoy our content live after the fact, if you're on the on-demand side, like I know a lot of you are, keep rating and reviewing. Does help those people. And they're a legion these days, discovering the content, discovering the world of options anew, afresh here in 2022. It helps them beat a path to our door. And of course, if you want to upgrade, you can always head on over to theoptionsinsider.com/secret club to join the party throughout the week here. Of course, pro Q&As on Tuesdays, options oddities every Friday, giveaways, all their fun stuff throughout the week, live shows throughout the week as well. So theoptionsinsider.com/secret club. And of course, send in those questions, those comments. We do love to hear from all of you guys and gals out there. And it's time to hear from my cohorts on the program, but we can't just dive into it. No, it's our Monday show. It's our kickoff show for the week. So we have to do it in style. And, you know, it is Valentine's Day today, listeners. So we thought we would go back to our 80s wrestling game and maybe get one in there for the ladies. I say that tongue-in-cheek. This is a wrestler we have done before, but he is thematically appropriate to bring back today. Now, it is funny. You guys have a lot of thoughts on this segment. Outside of that one guy who wrote in who says he wasn't a fan of it. Everybody else loves it. You guys like it so much, actually, that some of you are getting mad at me that I was letting people buzz in early on the songs. You want to hear the song. So we will let it play out for a little bit. And then I will count down and allow my compatriots to buzz in and choose. So therefore, it's a win-win for everybody, except for that one guy. You get to hear the song. They get to buzz in and try to win my praise and or at least begrudging respect for the rest of the episode. So without further ado, can you name that thematically appropriate Valentine's Day 80s wrestler?
I think I'm cute. I know I'm sexy. I've got the look that drives a go wild. I've got the move that really move 'em. I said chill, up and down their spine. I'm just a sexy boy. I'm not your boy toy. I'm just a sexy boy. I'm not your boy toy.
He's just a sexy boy, but he's not your boy. I can't even say it with a straight face. Yes, you probably know that one. But of course, when I count down and allow you to chime in, I want you to say not just this wrestler's name, who is widely regarded by many as one of the best of all time, but also I want you to say his thematically appropriate for Valentine's Day nickname. All right, here we go then. Are you ready? I will now count down, and then you guys say buzz, and I'll pick whoever goes first, and you get to chime in. All right, here we go. Ready? 3, 2, 1. Buzz.
Buzz.
Really? That's it? I thought you guys would both be champing at the bit for this one. All right, well, I guess Mr. Uncle Mike, given your lackluster buzz, I thought you'd be more excited. All right, Mr. Uncle Mike. First, A, Uncle Mike TOSAW from St. Charles Wealth Management. Welcome back to the program. And B, who is this thematically appropriate for Valentine's Day 80s wrestlers?
Shawn Michaels. And I'll be honest with you, I was kind of hoping you were going to go with Greg the Hammer Valentine today for Valentine's Day, but that's just me.
You know, I think Greg the Hammer, outside of the name, I don't really think love. I think kind of vicious, brutal, stiff, and not much of a gimmick. But you could go with that as well. I guess there could have been two. But yeah, we went for what's his nickname, of course? Shawn Michaels.
Him, Shawn Michaels and Marty Jannetty were the Rockers. But
he is also the Heartbreak Kid, right? Which is why he's also
the Heartbreak Kid.
He's thematically appropriate for today. HBK, as the kids call him out there.
Well, he didn't become HBK until the 90s, though, did he?
He did not. You're right. That is a later addition. He was still kind of Marty Jannetty and the Rockers back in the 80s. But we went a little bit beyond, yes, for the sexy boy.
I was muted when I was trying to buzz. That's why.
I thought for sure you'd be all over this one.
Because I beat Mike on the buzz. And I'm like, why isn't anybody responding? And I was like, he's HBK. He's Shawn Michaels.
All right. That, of course, that tinny voice is none other than the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, A, welcome back to the program. And B, yes, your thoughts, sir, on the one, the only HBK.
I mean, I will never forgive him for backstabbing Marty for super kicking Marty Jannetty, and then Marty Jannetty super kicking his own career,
ruining that man's life.
Yeah, no, that guy, Marty Jannetty, because Marty Jannetty was a talent. He just was not a personality.
You want to go down a scary internet rabbit hole? Search what happened to Marty Jannetty after the Rockers days. It is not pretty, listeners.
Not a good thing. But no, I mean, yeah, Greg the Hammer Valentine would have been awesome too. I loved him when he teamed up with the Honky Tonk Man to become Rhythm and Blues. I liked everything that guy did. He was he's almost as happy as the Heartbreak Kid himself when you listen to him talk. Just sounds miserable.
Chat's all over it. They were all hoping before. I didn't see this before we played it. They were all hoping it was Shawn Michaels. So yes, there you go. Our chat, they're on the same wavelength. They were down with that. Let's see what the market is down with. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show we break down what the heck is trading out there. Yeah, it's more than 80s wrestlers and HBK listeners. A little bit more. And coming into the start of the show, indeed the start of our broadcast week here, see another one of those kind of trying to figure out what we want to be today days. Also a little bit mixed signals out there. We were more firmly looking a little bit more red earlier in the session, looking a little bit better now. S&P kind of slightly up a little, about 0.05% or so. The NASDAQ up close to 0.75%. So NASDAQ feeling a nice little pop, and the Dow back in the red. So still one of those kind of mixed days, even though we were seeing a little bit more red on the screen earlier in the session. VIX starting to give up, I should say, some of those lofty highs. We got up there, listeners. I was joking on Options Oddities later on Friday. It seemed like I called or perhaps caused the bottom there for vol on vol views, because no sooner did I say on vol views, yeah, looks like vol's starting to come in. We're starting to rally and get a little bit. Maybe a sell-off's going to be a little bit overdone. It just plunged to the dark side, and vol exploded into a 30 handle. So quite the latter portion of that session on Friday. As Vol Views is wont to do, it tends to turn Vol, and it turned it again on Friday. Coming into today's show, we were at a 29 when we kicked off the show earlier. That puts us up about 7 points from where we were this time on Thursday. It's down to about a 28.60 or so now, but still much higher than we were this time last week. VVIX, frothy, topsy-turvy out there. It was about a 141 when we kicked off the show, up about 16 points from this time last week. VXX was at about a 23.5. That puts it up exactly 4 points from Thursday's show. You know, it takes a Herculean effort to lift VXX 4 points in less than a week, yet we got that out there. Same deal, UVXY. You can argue it takes even a more Herculean effort to lift UVXY, yet also up 4 points when we kicked off the show. It was at about a 17 in UVXY. And VolQ back up to the 30 handle was at about 30 exactly when we kicked off the show, up 6 points from this time last week. Let's go out now to our Shawn Michaels lover, Mr. Uncle Mike. Any enduring memories of the Heartbreak Kid? AB, did you catch a big game yesterday? Any fun thoughts or memories or high stakes wagers from that game? And then C, what's catching your eye in today's kind of mixed markets?
Well, I guess so. Shawn Michaels, Super Bowl, and then today's market. So Shawn Michaels, I don't really have a lot of enduring memories of him. He came around kind of after the 80s wrestling buzz went away. He was more of a 90s guy. I got a lot of respect for him, and he had a pretty tough life from some of the mistakes that he made during his career. But man's seems to be, from what I can tell, doing better now, born again Christian. And so more power to him. I know that a lot of people didn't like him after the Montreal screw job of what he did to Bret Hart in the late 90s, or he was part of it, claimed that he wasn't, but a lot of drama with that. And so you can't say he was one of my favorites as a wrestler, but nonetheless, got to respect a man who's headlined all the WrestleManias that he has and can move around like he does. So a lot of respect for him, but just not one of my all-time favorites.
Uncle Mike, as I'm looking here, we're getting some votes in the chat for Greg the Hammer as well. So there was some love for Greg the Hammer for Valentine's Day. So you were not alone, sir.
Very good. That makes me happy. So anyway, with that, in terms of yesterday's Super Bowl, I just think that if you sack a quarterback 7 times, it's hard to lose. And so the Rams just had a field. I mean, it's not that the Bengals O-line is awful, although they're not known for their prowess by any means, but I just think the Rams defense is just that good with what they did. In today's game of modern football, the fact that we had a lower scoring game like we did, hats off to both defenses, but I think that the Rams played an excellent game on defense. And when Von Miller in the Super Bowl, I don't know if a lot of you guys remember, but when he played for the Broncos a few years ago, when Peyton Manning won his last Super Bowl, Von Miller had a big day that day as well. When you get things like that, and then just a defensive line just killing it like what the Rams D-line did, it's tough to lose. So hats off to the LA Rams. And you got to love any quarterback that spends his whole career stuck in possibly the worst spot that you can possibly be in, the Detroit Lions, for his whole career, comes to LA, wins a Super Bowl. Got to admire an American story like that by all means. So good for him. In terms of these markets, today is kind of a ho-hum day. 10-year notes selling off a bit just from the increase with which it took on Friday. I think it's just a lot of profit taking with where it is. S&P itself, we're still hovering around that 4,400 mark. We did break below it, but we're not really making a huge run below it. So we are kind of holding on to a key number. And so we're still down on the year, the S&P itself, but we're kind of holding steady, all things considered, especially with all of the overall movement with which we have had. There was a lot of talk on the internet that when the Super Bowl kickoff was going to happen, that was when Russia was going to actually invade the Ukraine to show their power and to try and mess with the American Super Bowl. When the markets opened, the futures markets that opened at 5 o'clock Central Time, Super Bowl kickoff at 5:30, perfect time to invade the Ukraine, a lot of people were saying, but thankfully that didn't happen. And so the only real major move that I'm seeing, and it's not really that major, is a little bit of a sell-off in the 10-year note. Within the Sectors, just looking at the Qs, that's up 0.75% on the day. And so what that's telling me is that we are getting some sector movement through technology in this case, as well as some consumer discretionaries. Where we are having the sell-off is in energy. XLE is down almost 3% on the day, the energy stock. So we are having a little bit of a sell-off there. And it seems to kind of be balancing out the technology and the consumer discretionaries going higher to give us what would appear to be kind of a boring day, but actually isn't quite so boring. So that's what I'm seeing right now. And that's what I see.
Not so boring, says Uncle Mike. Yeah, that game wasn't too boring yesterday. I held off on any wagering ahead of the game. What was it? The lines was like plus minus 3.5. Wasn't that exciting? But as the early route started going, it seemed like it was going for the Rams. They bid up the Bengals to like plus 9.5. At that point, I said, 9.5 points super. I got to go for that. So that ended up working out. So the Bengals ended up, even if you took the initial spread, they ended up covering the spread at the very least. So that was kind of nice. And 9.5 points. My God, they were winning for a portion of the game there. So it was a fun one. Mr. Meatball, sir. Any thoughts here on the big game? Yes. By the way, our chat was saying we could have let the Shawn Michaels play for a while. I can't let the whole show be nothing but the Shawn Michaels entrance. That would be funny. Maybe later we'll put an addendum for extra at the end of the show. How about that? But Mr. Meatball, any thoughts on the big game? And then what's light up your tape in today's market, sir?
My main thought on the big game is that Cincinnati covered the spread, so I won. Go me. And Joe Burrow, the line just could not hold up at the end of the game, and I can't believe they tried to pass on 4th and 1. They just had no chance.
They ran the whole second half, and then they passed on 4th and 1.
And then they pass when the O-line is clearly tired, and the defensive line for the Rams is clearly. I don't understand the call. Mike, you're an offensive line guy. You tell me why you do a pass there instead of a run. But
many thoughts on that if you'd like.
Yeah, no, I would like that at some point, because that is just absolutely unbelievable. And the market, yeah, I mean, we got a strong VIX and a flat to even green market, and the reason being is that people are worried. There's uncertainty. We had that emergency closed door Fed meeting today that people are wondering about, and we had a market that has not figured out what it wants to do. Energy is getting smoked today, off the lows, but definitely had gotten a little overbought, so not surprised. Tech looking strong, but the VIX is going up, partially from the weekend, but a lot because people are just really unsure about what's happening. And so when you're not sure, this is one of those times where the VIX can go up and up, and the market does not have to sell off as people build up hedges. The speed with which VIX might drop, if this gets resolved, could be absolutely astounding, folks. So just be on your heels.
Speaking of the speed of VIX, what were your thoughts, sir? Because we were obviously off the air for Vol Views on Friday, right as the worm started to turn. What were your thoughts on that, shall we say, rapid escalation to the upside in VIX in the latter half of the session, sir?
I was a little surprised that we managed to not completely fall apart at the end of the day. I thought we were going to settle below 4,400, and then the last 15 minutes of the day, a bid came in and pulled us back to about 44.17. We're actually mildly above that now. Like I said, I was really surprised that we caught a bid, and thus, this kind of turnaround from this morning, not a huge shock. I think there are some value buyers starting to poke around out there in some specific names. I'd also point out that Disney, Zillow, some of the names that crushed earnings that maybe took it on the chin, that didn't get the full earnings move because the market sold off, are seeing some real strength today because of the market being up. So that's just kind of my two thoughts there.
Yeah, good old Diz back to 152, up and a half or so, up about a little over $3, a little about 2% on the day, bouncing from that 138 level they hit not too long ago, which again was their kind of pre-pandemic level over there in the old Diz. Let's see what's up out there in ye old markets. And, VIX not playing around today, listeners. VIX looking frothy. 485,000 contracts already on the tape out there as of right now in VIX land. Listen, let's look really quick. Let's just look at some of the with some of the most actives in VIX land today. Let's see what the hell is driving it today. Oh, it's the March 7th. Oh, Mr. Meatball. It's your old friend, the OC75s. Back in action today, sir. Another 50,000 of those bad boys going up today.
I saw that. Yeah, they did. Not only did they did OC, they did March. So they did the
March 75s as well.
They did the March 35, 75, 1x5, and they did the OC 75, 1x5. In October, a trader now has a position short 30,000 of the VIX March, October 35 calls, and they're now long 150,000 of the OC 75s. March, they just started building that position. They are short 10,000 of the 35s, long 50,000 of the 75s. This is a Vega play. So they are looking for VVIX to make a strong move. I think they'd be happy if VIX got to 45. What they really want is VVIX to go to 200 and to clean up. VVIX goes even to 170, and they're going to be looking at making, north of $50 million on a trade that was pretty close to zero outlaying debit. So a really interesting and thought. I don't know if I love it, but definitely an interesting trade.
Want more detail on that? We went into that a little bit more. The old 1x5 over there in VIX out there these days, dominating the tape again today. It's nothing to sneeze at when there's nearly 500,000 contracts up in VIX already by this portion of the show. Listen, that's something as afoot. Also, you can see that reflected in the ADV. We're back up over that 700K level, listeners. 711,000 contracts is the ADV in VIX land. So we got up to this level before, gave it all back, and then came roaring back to life there with all that Omicron madness and everything else like that. And it's been kind of looking frothy ever since. Speaking of looking frothy, SPY, 4.2 million contracts. That's nothing to sneeze at either. The ADV is about 7.3, almost 7.4 out there now. So SPY putting up the numbers. The S also over 1 million right now. So that's a pretty aggressive day as well when the S is already over 1 million contracts. The ADV now up to 1.8 million in the S. So that's nothing to sneeze at either. And then the laggard is kind of the small caps. At least IWM right now only doing 470,000 contracts. Man, that sounds like a lot, but again, the ADV is now 1.1 million. So that's pretty robust. It wasn't that long ago. It was about 530, 560. So a 470 day would have seemed like it was blowing the doors off. But now in comparison to everything else out there today, it looks a little light. Let's see if things are light out there in the single name most actives. And, actually, the answer is yes. I can't recall another day in recent memory where it's cost you this little to break into the top 10. So this is one of those topsy-turvy days. A lot of days we'll see action, maybe not so much in the indices, but very firm, very robust in the single names. Today, it only cost you 155,000 to break into the top 10. That's roughly half of the kind of 300K barometer that we use to really indicate there's something afoot out there in the markets today. So it only cost you about $1.55. That gets you to Moderna today, listeners. So things are a little bit quiet in the single names, which is kind of interesting given everything else that's going on out there. I think you could find some pockets that would get us over at least 200K in the top 10, but the answer is no. Number 9, Bank of America, 156. A mere 1,000 more for number 9 there. Number 8, our old friend Ford. Let's see what Ford is up to. They're kind of a perennial top 10er now. Ford looking kind of unched on the day right now, still hanging out around the 17 double level or so. Got higher earlier today, about almost 17 3/4, and then sold off about 17.33. So Ford kind of giving it back. We talked about this on Oddities recently. There was some, shall we say, aggressive upside verticals going up not too long ago in Ford for size, 30,000 contracts a piece and stuff. Seems like most of that money going the way of the dodo now. Folks were actually aggressively rolling up. They hit it earlier with that first aggressive move up in Ford. So they were taking that money and putting it to work even higher up the strike chain. And we know sometimes it's better to take that money and put it in your pocket than put it back to work. And unfortunately, it looks like, at least for now, it seems like a lot of that upside going to go the way of the dodo in Ford. Ford unched pretty much unched still, and at about 168,000 contracts for number 8. Number 7, Microsoft. Been popping back in there a few times. Ever since they made their big bid for Activision, they've been a little bit more, shall we say, intriguing out there of late. Microsoft up about $0.50 today. Good for 178,000. Is the Justice Department, is the FTC, are they going to come and break that deal up? Would be strange to break up a video game deal, but it does seem like big tech is under the crosshairs these days now more than ever. So we shall see. Number 6, back to the memes. AMC. All you apes out there doing your business today. AMC Giving up the ghost, $0.75 of a buck, $18, pretty much even, but good for number 6, 186,000. Number 5, it's a day that ends in Y. Got to have NVIDIA in there somewhere. Today it's number 5, 229,000. We're all the way up to number 5, listeners, and we're only at 229,000. That usually isn't even enough to break into the top 10. So that kind of shows you what kind of day we're having. Number 4, it's Facebook. Are they putting some more lipstick back on this pig? Is it starting to turn? Nope. Back still to the downside, off about a 1%, right around 217.25 or so for Facebook, and a good for 270,000 contracts at number 4. Number 3, it's always hanging out somewhere in like the 3 to 5 range. Today it's number 3. It's AMD, 426,000. So finally we're getting to some respectable paper, but we're all the way almost at number 3. Number 2 is Tesla with a pretty pathetic 608,000, at least for Tesla. That ain't a heck of a lot. And let's see, Tesla up, a nice pop today, 2.5% for Tesla in the 881 range out there today. And number 1 with, I can't even call it a bullet, a BB. It's the fruit company. It's Apple, 638. When was the last time we saw Apple in the 600K range? It's been quite some time. Apple 169 today, up about 0.25%. Not a big day for them. Earlier in the session, though, they were looking lower. So they're up about almost $2 from their lows on the session. They got down to about 167.15, and now they're right around 169 and change. So they have rallied from that level. Let's see, how low did they get in their recent sell-offs? 167 and about 0.25. That looks like it's about the near-term low. Actually, about back in the end of January, they got to 159, so 10 handles lower. But intriguing stuff, yeah, not a whole heck of a lot of anything really today in the most actives, which is a little bit surprising. We do have more stuff on the docket here from an earnings perspective. In fact, we just updated earnings move, earnings season, earnings move results, and earnings trade reports for you. Hot off the presses, theoptionsinsider.com. Let's see what names we have popping off this week. Oh, we got Weber Grill. I think might be coming back to that one in a little bit. And Avis, that's today. Tomorrow we got Marriott. Roblox, that's one's been interesting to watch. They've kind of become a bigger name. Now everyone's gobbling up every gaming name. Is someone going to come for Roblox? We shall see. Upstart, Airbnb, Viacom, and Wynn Resorts. Wednesday, we got Shopify and Crocs. Crocs, not a big fan of their product, but they will always hold a near and dear place in my heart. Way back 15 years ago, the early days of the Options Insider, Crocs were one of the first names that we profiled some unusual activity on that really hit it big, really put the site and some of the content on the map, and it kind of just unspooled. I think that was the first day we ever hit 1,000 people hitting the website. I thought that was unbelievable. I was like, oh my God, 1,000 people looking at this stuff. It blew my mind back then. Crocs, the catalyst that ignited the fire. That was the Options Insider. Hilton on Wednesday as well. NVIDIA, Marathon Oil, Cisco, DoorDash, Wingstop, Cheesecake Factory, and AMAT. So a big day on Wednesday. Thursday, Palantir. Going out to the Tolkien-related tech names. What do you think of that Lord of the Rings teaser from the Super Bowl? Interesting stuff. Walmart, Roku, Shake Shack, and Iridium out there. And then Friday, we got the old DraftKings. Seems like online wagering more popular than ever. I had my app open during the Super Bowl like everybody else. Not DraftKings. They're not really available here in Illinois. But I had others. I was looking at some of the live wagering. Like I said, the Bengals got up to plus 9.5 right in the middle of that first quarter. How do you not take that at that point? So that was kind of made the game a little bit more fun. But yeah, interesting to see what DraftKings. Also John Deere. And we did have Weber before the bell. Like I said, we're going to be coming back to them. They were at 1044. Weber Grills, of course, listeners, if you're not familiar. And they were pricing in 5.2%. And the market not liking what they were delivering, listeners, because they sold off 15.6% instead. So a good three-banger there for our earnings move. So a little bit of action out there in good old Weber. In terms of the season, we have turned green, listeners. Remember I said last time we did it on Thursday, we hadn't factored in, obviously, the entirety of the week for earnings. We see how that would turn out. And sure enough, week 3 and week 4, both tying right now at 116%. So that brings the season up to a resounding 103%. So if we could stay on this trajectory, listeners, this would be the first season since the pandemic where we have actually made some money if you were a vol buyer out there. So that would be certainly epic proportions. Looks like we have also the folks at ORATS also rounded up on adjusted week 2. It was 68 last week. Now it's 75%. So looking a little bit better there too. So 103%. Can that maintain? We shall see. Earnings trades going up today. They're buying straddles in BKI and IPGP and also a straddle in good old WCC. They're shorting straddles in ANET, ANET, and they bought a calendar in OMCL. They have the expirations, they have the strikes, they have the vol, they have all that cool stuff. So far, looks like we have this season 53 long straddles, 48 short straddles, and 75 calendars. Going deep on the calendars, listen. So far, no short calendars. They had a few of those last season. They actually had 71 of those last season. So we'll see if we can get some short calendars on the docket. Those are just mind-bending, I know, for a lot of you people out there. Let's look at a couple other names really quickly. Again, these reports all updated, hot off the presses as of showtime. Marriott tomorrow before the bell, about 170 is where they were trading. They were pricing in, get this, listeners, $9.64. In the past, they've moved about $4. So that's a whole heck of a lot of juice out there in Marriott right now. That's interesting. Probably merits a further look. Airbnb, the 15th after the bell, 166.5 is where they were trading. They're pricing in $14.32. In the past, they've moved $13. Oh, the aforementioned Roblox, they're also on the 15th. 66.81 is where they were trading. This might they went public not that long ago. $12 is what they were pricing in. The past, they moved $14.40. So markedly less juice in Roblox this cycle. That's interesting as well. Let's go out to, what do we got here? We've got Shopify. Why not? Shopify, 16th before the bell, $8.54 is where they were trading. Nice and rich. They're pricing in $86.50, listeners. In the past, they've moved $49.71. So you're talking nearly a 2x there as well for Shopify. My goodness. Wingstop. They probably had a big day yesterday. There before the bell on the 16th, $153.70. They're pricing in $12.30. In the past, they've moved $8.50. So it seems like the order of the day, listeners, is more juice rather than less. AMAT, same deal. 16th after the bell, $132.50 is where they were trading. They're pricing in $8.36. In the past, they've moved about $5. Wow. DoorDash, $95. They were pricing in $13. In the past, they've moved $9.21. So there's a whole heck of a lot of extra juice out here, listeners. Let's go to Cheesecake Factory. They're on the 16th after the bell. They're at about $40. They're pricing in $3.50. In the past, they moved $1.81. So you're closing in on a 2x there as well. NVDA, 16th after the bell, $239.50 is where they were trading. They're pricing in $22.08, actually. In the past, they've moved $9.32. My goodness, that is a heck of a lot of extra juice. But again, it's NVIDIA. They're a perennial top tenner, so they're probably going to bring it on earnings. That'll be an interesting one to watch out there as well. Wow. Let's go to a couple of others, and let's go to Palantir. That's one a lot of you watch. That one's kind of been beaten up a lot of late. Let's see where Palantir is hanging out right now. A little bit of a rally today, up about 2% to closing in on $13.50. Though over the past month, it got down to looks like about $12.50, $12.45. So they are certainly down from the 52-week high of $33.65. Let's see what's going on in Palantir. The 17th before the bell, they were at $13.13 when we ran these numbers. They're pricing in $1.49. In the past, they've moved to $1.35. So a little bit extra juice, but nothing outrageous in Palantir. All right, let's go to DraftKings. 23.33. They're on Friday before the bell. They're pricing in about $3. In the past, they've moved about 1.5. So they're pretty much literally a 2xer there. Again, given how active that sector is right now, kind of hard to argue with that. Let's ended up here with Walmart, kind of a good cross-section of the economy name here. 17th before the bell, 135 1/3 is where they were trading. They're pricing in 5 1/4. In the past, they moved 310. That's a lot of extra juice for Walmart as well. Not exactly known for being an earnings blow the door off type of name. So pricing in that much extra juice over $2. That's a lot of extra juice in Walmart, listeners. It does seem like the order of the day is more juice rather than less. Do you agree with that? You think that's the right play? Let us know. Check out those reports as well. You should be looking at these if you're even remotely interested in trading during earnings season, because all the numbers, all the data is there. Meanwhile, we got to get rolling. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, let's do it. Let's go out to this. We were just talking about them. I said we're going to come back to them. This is Weber Grills. I do believe this is the first time we talked about them on the old Odd Block. If not, it has been quite some time. Weber Grills, you know them. They make those grills you maybe lower and love or maybe don't like. They also have the chain of restaurants grilling the aforementioned items out there. Ticker symbol Weber, WEBR. Like I mentioned, they're kind of getting beaten up. They had their earnings this morning, not exactly looking great, even though it looks like they have bounced off the low. The 52-week low was actually today, so that should tell you how things are going. It looks like they're a newer addition because we only go back to August for them. They topped out for the year at about $20.50. That was back on August 9th. And then ever since then, they've kind of been slowly drifting to the dark side. Like I said, getting to their low for the year today, actually. So they have rebounded off that low today. They're, like I said, about $9.50. They were trading $8.65 at one point this morning. So getting a little bit better out there. Let's see what we have going on today. Looks like someone, though, has decided to draw some lines out there on the 7.5 strike in Weber today. There was some action across a lot of the months on the 7.5 puts. You saw some in March and others, but the biggest print was in June. It was a 4,000 lot of the June 7.5 puts going up for 68 cents. These were kind of bouncing all over the place today. This market was pretty wide, as you might imagine. It was about a 59 vol out there. Again, this was all done in the kind of the post-earnings madness, so kind of why these markets are a little bit wider. And let's see, yeah, so 68 cents for the 7.5 put. Again, that is a buck below the 52-week low at that point, plus the put premium. You're getting pretty low there. So an intriguing line in the sand. Mr. Meatball, I got a feeling you probably don't hate these. Of course, this market was pretty wide. Maybe you think they came in and actually scooped these, in which case, a little bit of a different story, sir.
No, it feels like it was a sale. And yeah, no, I don't hate this at all. This makes sense, especially with vol where it is. You can get some real premium. I'm all for, if you really like a stock, selling some juice here.
Well, they sold some juice. I think they got nearly 70 cents on a 7.5 put, listeners. You can't look too askance at that unless you think this thing is heading to the toilet. Again, they're going out to June. That's a little bit farther than I usually like to play. But again, you can't look askance at that one. Again, and if you do get the stock, you're getting it at a 6 handle at that point. You can decide whether you like that level or not. But you like these puts, listeners? I got a feeling a lot of you out there who like yourself a little bit of a put right are probably going to be intrigued by these. Or do you think maybe the writing's on the wall for Weber and it's just all down from here? We shall see. Let's go on out now to the cleverly named Thor Industries, Inc. They sell towable and motorized RVs. They own Airstream and a bunch of other stuff like that, listeners. And ticker symbol THO, T-H-O, not can be confused with Thor Equities and a bunch of other Thors that float around out there. Very popular name. Probably even more so the last decade post-Marvel. But let's see what we got out here today. Ticker symbol THO, T-H-O, trading right now $95 and about almost 95.5, up about half a buck or so today. This is the name that's had an interesting trajectory. A year ago, it was trading about 119, and then it shot up in March to its 52-week high of 152.20. So it had a nice pop there. And then it kind of gave it right back. That was on March 17th. By March 24th, it was trading 125 again. So pretty much right straight up and straight back down for Thor Industries. Then it tried to buck the trend and fought its way back up to about May. It took a little over a month, but it got back up to about 146. And then it sold off again. And then by June, it was back to below where it was, down to 104. So it lost quite a bit there. Went from almost 150 down to about $100. So that's quite the clip. And then it bounced around there for a while, got back up to 127 in September. And then it kind of just started selling off again from there. Its recent low for the year was 85.20. It came in late January, January 21st to be precise. It's kind of rallied a bit since then to where we find ourselves right now, 95.5 bucks. What did our Eye of Sauron find out here in Thor Industries? Looks like more puts. In particular, some more line in the sand puts, this time on the 85 strike. So our last friend was going on the 7.5 strike. This guy is going out to the 85 strike. Now, he's only going out till this week, pretty much. But he's selling the 85 puts for 20 cents. He's crushing the bid there because the bid was 25. In order to get nearly 5,000 done, he had to go through the bid to 20 cents. That's still a 72 vol for these bad boys. The stock was lower when he put these up. The stock was 94.92, so these are probably looking a little bit better. Got a little bit of the old decay kicking in now as well. The next earnings is not until March. They got a little time for these. These are not earnings puts. These are not post-earnings puts. This is just someone, looks like, trying to harvest a little bit of the old premium here this week and probably not really looking to pick up the stock. Mr. Meatball, what are your thoughts on these 85 strike puts going up for this week for 20 cents through the bid, sir?
Yeah, again, it looks like it's just a weekly little quick yield pickup on someone who doesn't think it's going to drop, and makes sense to me. I don't know that I think it's worth picking up 20 cents on an $85 stock, but that is almost certainly what they're doing.
Yeah, it puts it in perspective. We're just talking about 75 cents for a $7.50 stock. Of course, that's going out to June. A little bit of a different beast, but still, it puts the relative levels of premium in perspective. You want 20 cents for the rest of this week? It's talking about $100,000 for what they did here. They could sweat it a little bit at the end of the day. That's the old picking up nickels in front of the steamroller, listeners, as we used to say on the floor. Let's go on out here. Let's review one before we get on out to the Uncle List of Mikes for some strategery. Let's go all the way back, listeners, to December 13th. In particular, we are talking about everyone's favorite name. This is PK, ticker symbol. This is Park Hotels and Resorts, Inc. And let's see, at the time, on December 13th, we profile, looks like about 3,000 of the Jan 17 half puts going up for $1.05. These are about a dime off the bid, but the bid was pretty wide. It was 95 cents, or the market was pretty wide, 95 cents at 145. So nice 50-cent wide markets on these puts. Clearly not the most liquid name on the planet. They hit the bid for about a 47 vol. The stock was $17.66. So these are pretty much at the money puts when they sold them. These were December 13th, so they had about a month. So this was a pretty straightforward trade. They got $1.05 for these, but again, they were playing with fire. They were selling at the money puts. Let's look and see how the stock has done over the past month. Let's see. Let's go back to December 13th, and they had a nice little rally from there. Stock got up to about 1950 or so and hung out there. Actually, 1981 on January 7th. So these puts were looking good. And then as we approached expiration, the stock started plummeting and they started to sweat. By, let's see, the day of expiration, the stock was selling off again, but it didn't quite get there. Listen, it got to 18.11. That's where it closed on expiration. So they were sweating until they finally ended up going out okay. These puts were still open on expiration, so they didn't take any off when the stock rallied nearly $2. You can maybe argue they probably could have been judicious and have done that, but they would have obviously made less, probably taken them off for about half of what you sold them for at that point. But also, you live to fight another day doing that kind of stuff as well, because another session or so, this thing got to 17.04 within the next week. So they would have blown through that strike pretty quickly if they had waited any longer. So intriguing stuff out here. They had to sweat, but at the end of the day, it worked out. And Mr. Meatball, looks like they pocketed about $300,000 on these puts. What are your thoughts, sir?
Yeah, I think that's hits the nail on the head. It's not a bad business if you're willing to sit it out. Otherwise, it can be less fun.
Are you down with your Rock Lobster's favorite metric? That's a little bit above his metric of the girlfriend's Ferrari amount that he thinks people are selling premium for.
I'm sorry. I'm not
he hasn't told you this.
Ferrari analogy.
That is his favorite thing. He says it on the show every time. He thinks people come out and sell premium in amounts just enough so they could buy their girlfriend a Ferrari. So to him, that's around $250,000. So that's his metric.
First off, most people's girlfriends don't want a Ferrari, folks. This is how little Andrew knows.
I'm just saying, this is Andrew. This is not me.
What they want is a G-Wagon. And yes, that will pay for a nice G-Wagon. That is what your girlfriend wants. If you're rich and you're like, hey, should I buy my girlfriend a Ferrari? No. Get her a decked out G-Wagon and she will be much happier. But yes, that'll pay the cost of most of a nice G-Wagon.
I'm going to tell him you dispute his metric. You say a G-Wagon instead, which, all right, they are pricey, kind of ugly too. But hey, that's a conversation for another day. As we keep on rolling, it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Mr. Uncle Mike, have at us. What are your thoughts, G-Wagon versus Ferrari, for your significant other? And then B, if you have any time left over, hit us with some strategery, sir.
In terms of G-Wagon versus Ferrari for the significant other, I think my wife would rather have a boat, quite honestly. She'd want a pontoon boat, a large pontoon boat, but I'm just the oppressive one and forcing her to live with our Mastercraft ski boat. So that's probably what my significant other would want if we want some type of large vehicle.
All right, you got some time left over, so hit us with some strategery, sir.
Okay, just making sure I had the time left over. Okay, so this time of year, a lot of people are making their decision on Roth contributions or traditional contributions for what they can do. Now, we've talked about before the backdoor Roth IRA strategy, to where if you make too much money to where you do not qualify for a Roth IRA, then you can do the backdoor Roth IRA strategy. It is something that's available to you. It's not simple. So make sure you do your research on the rules, the exceptions, and the things that can hurt you and harm you, and the things that can benefit you, but it's something with which you can do. What I want to talk about today is for those of you in the audience that do qualify for a Roth IRA and also qualify for a traditional IRA, and you're not quite sure which way to go. Now, the concept I'm going to say would also apply to a Roth 401k versus a traditional 401k, just depending on how you're set up through your work. So let's say that we have the classic debate, which is better, a Roth IRA or a traditional IRA? Well, my answer to that is yes. They both have their spot. And a lot of my clients have a little bit of each, myself included. And so it just kind of depends based on your long-term financial plan of how much you want in each of them. So first off, let's start by saying, what's the difference between a Roth IRA and a traditional IRA? A Roth IRA is where you can put money into a Roth IRA and you get no tax deduction for it whatsoever. If you put $5,000 into a Roth IRA or $6,000 or whatever you're able to put in, depending on how old you are, whatever your limit is, you are not going to get to deduct one darn thing. However, the money grows and grows and grows, or at least you hope it grows. And then when you are 59 and a half, you can take the money out. Whatever you take out is tax-free. So if you put in $5,000, it becomes $10,000 after 10 years or whatever, or 10 days for that matter. Let's say you're doing an aggressive trade through Sebastian. If that's the case, then you do not have to pay any taxes on it. Now, there's a couple of other rules, the 5-year rule and some things like that. Not going to get into that right now, but just kind of want to give a comparison to the two of them with how it would work. Now, initially, you're probably thinking, well, I'd rather just get my taxes out of the way right now, and that would be a better way to go. No question. Why would anyone even consider a traditional IRA or a traditional 401k? Well, first off, let's explain what it is. If you have a traditional 401k or a traditional IRA, let's say that you have that same amount of money, and let's say that you have, let's make that $5,000. So you had $5,000 in the traditional IRA. Now, remember, you get a tax deduction on that, and let's just assume that your tax rate stays the exact same the entire time. So with a Roth IRA, if you make $5,000, let's just say that's all your annual salary is for the year. You make $5,000 and you pay 20% of it in taxes. Once again, just making up numbers to keep this simple. You're really only going to be able to put $4,000 into your Roth IRA. Market doubles, or let's say that your money doubles, you'll have $8,000 to take out, but you won't have to pay any taxes on it. Now, let's say that you put money into a traditional IRA. Once again, you have $5,000. That's your entire annual salary. You want to put all of it into your IRA. You don't have to pay any taxes on it, so you can put the full $5,000 in it. Money doubles because it's the same investment. It's $10,000. However, when you take the money out, you have to pay a 20% tax when you take it out, let's say. That means it's $8,000. So the point is that both of them if all things are equal, they are and act as the exact same thing. So how do you decide which of the two works best for you? It all depends on what you think your tax rate's going to be and for what things. So, for example, let's say that you have some money allocated that you want to give to your church, that you want to pay in mortgage interest when you retire, or let's say something that you know that you can get a deduction for. Well, that section of your money you want to put into a traditional IRA or traditional 401k. Reason being is that when you retire and you take the money out and it's taxed, you'll automatically get to deduct it again because it's something that's used as a deduction. Now, there's other deductions that exist, but those are just the first couple that come off the top of my head. Now, for the rest of your money, if you know that you're not going to have it be deducted, you probably want to put more of it into a Roth IRA. But once again, if you are in a high tax bracket and you believe you're going to have a lower tax bracket when you retire, then you probably want to put a little bit more into a traditional IRA or a traditional 401k. If you believe that your tax rate's going to be the same, then maybe or possibly higher, then maybe you want to consider more of a Roth IRA. They both are valuable tools, and they're both very important to use when you're making your retirement plans. The other thing that you can do is you can maybe trade a little bit more aggressive in your Roth IRA, because if you have major gains in there, you won't pay any taxes on them. Of course, the disadvantage is that if you have major losses, you won't be able to deduct any of them. So they both have pros and cons. Once again, this is something to consider when going over your long-term financial plan. If you are of the school of thought saying, well, I only do this one or I only do that one, I think you're missing out on a valuable tool, whatever side of the fence with which you fall on. Everybody's different, but those are two valuable tools with which you can use either way. And that is the strategy block for the Valentine's Day IRA season. Strategy block.
Nothing says love more than IRAs. Last week we had a listener suggest, forget chocolates, forget flowers, just sit your significant other down and talk to them for an hour about rates. I think Uncle Mike would substitute in, talk to them for an hour about IRA traditional versus Roth conversions. I think what significant other would not be excited by such an offer? As we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. We got a fun question of the week this week. A lot of people were trying to look at the Super Bowl and see what it envisions for the future of the market. There's a lot of dubious correlations out there. My favorite is the old Super Bowl indicator, which looks at the total combined score of the Super Bowl. And if it's below 45, which it was in this case, then it looks like it's going to be a weaker year ahead for the market versus a score of above 45 points. So with that in mind, the Super Bowl indicator says it's going to be a weak year for the market. So how are you folks positioning out there in, let's say, your broad SPY and index portfolios? I'll give you four choices. You're still straight up long SPY, SPX. You say Super Bowl indicator be damned. Or you're maybe down the back a little bit, going maybe long SPY calls or verticals instead. Or maybe you're going the stock substitution route, taking some of your underlying off the table, subbing it in with a nice juicy in the money call. That could be it. Or maybe you're hedging your bets. You're still long SPY, but you got some of those puts in your back pocket for a rainy day. Or you're going for other. And this went live right before showtime. Seems like half of you so far, 50% of you, are saying you're long SPY with some puts in your back pocket, so you are prepared for a bit of a rainy day out there. A third of you saying long SPY calls or stock substitution, and we got about 17% saying other. And again, if you choose the other, I want to hear what your other is. Maybe you got some funky iron condor ratio swap going on out there. I don't know. Hit us up. We'd love to hear your others. That's kind of the fun. That's why we do the other. And so far right now, a whopping 0% of you have chosen just hanging out long SPX or SPY right now. That's interesting to me. Again, this just went live before showtime, so those numbers will evolve. Get over there at options to make your voice heard, listeners, as we go around the horn. Let's go out to the greasiest of meatballs. Mr. Meatball, sir, while you're saving up to buy your wife a nice G-Wagon, what is on the radar? What are you watching for the rest of the week?
Well, we've got the Ukraine stuff going on. We're going to hear some sort of news about what the Fed was discussing. We have PPI coming up. That's a big data point that people are going to be paying attention to. And I'm watching this VIX. There's some rumor that just hit on Ukraine, and vol exploded. So I am keeping a tight eye on everything going on, really from a macro perspective, because that is driving everything.
What kind of a villain would Putin have to be to actually launch an invasion during the Olympics? That is the entire reason for the existence of the Olympics. The Greeks said, hey, let's all stop fighting for a week or two, and let's go off and have these games, and let's settle our differences through sport and athletic contest. In fact, it was a serious offense if you did anything martial or launched an invasion in ancient Greece during the Olympics. They would all come for you at that point. That was serious business. You were offending the gods. So, yeah, if Putin were to pop off his Ukrainian foray, shall we say, during the Olympics, that's pretty freaking awful. Against the entire spirit of what we're trying to do here. But I digress. Let's go on out to the land of Mr. Uncle Mike. Sir, what are you keeping an eye on for the rest of the week?
Yeah, definitely looking at this rumor that just came out with the SPX selling off like it has in the last 10 minutes or so. And then just also watching just the numbers, because we are below the 4,400 number that I talked about at the beginning of the show, as well as all of the macro events that are happening. And so keeping an eye on all things.
Uncle Mike is Argus from the old ancient Greek mythology. He has a million eyes, and they're all focused on all different things out there. As it looks like we're closing our Kiev embassy now. So that's some of the latest thing that seems to be spooking the markets out here. Yeah, a little bit of a sell-off as we end the show here, listeners. Looks like most of the major indices fully off 1% now, if not more. So once again, the worm turning during our shows, listener. That's it for this show, but of course, we'll be back in a little bit. Going to be doing the crypto rundown, some interesting stuff out there. Going to be joined for the first time ever on that show by the folks over there at Back, wanting them to come on the show for years to tell us what the hell they're up to in the world of crypto. I guess we're going to find out in about an hour on the crypto rundown. So stay tuned for that. All you Secret Club folks can join us live there. Ask your questions in the live. You probably got questions about the hell Back's up to too. Hit us up. Let us know. Of course, if you're listening after the fact, just hit next on your device of choice. And Mr. Uncle Mike, sir, if they are interested in checking out some Uncle Mike type of content, where should they go? What should they do?
Couple places. I just put out another video on YouTube, so it's type in St. Charles Wealth Management on YouTube on why would you sell a put. There's going to be a lot more of those videos coming, so stay tuned to that. Feel free to follow me on Twitter at Mike TOSAW, TOSAW, and check out my website, stcharleswealth.com. If in any of those instances you are looking for a financial advisor who delves in the option product, if and when it is appropriate, which is a lot.
Check him out, stcharleswealth.com, on the old Twitters at Mike TOSAW, TOSAW, all one word, and on the old YouTubes. I do believe he is St. Charles Wealth. We also were going to endeavor to reshare those for you listeners, so you can get your tasty dose of Uncle Mike wherever you like on the video side. And Mr. Meatball, if folks want to read stuff or watch stuff or go to a webinar or learn something, where should they go? What should they do?
We're writing great VIX content, all sorts of amazing stuff every single day at optionpit.com. Come and read our blogs. They are worth the read. You're going to learn a ton, and it will help you become a better trader. Optionpit.com.
Optionpit.com is the place to go. Like I said, we got to get on out of here. We're going to be shutting down the live stream for a bit. We have to rejigger it so we can get the folks from Backed on for Crypto Rundown. But we'll be back live for the Crypto Rundown in a little bit less than an hour. And then, of course, tomorrow, another great pro Q&A coming at you hot and heavy. Wednesday, Options Bootcamp, Options Playbook Radio. Then we're back again on Thursday, episode 2 of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.